Let me bring to the show our next guest this morning, Dan Gramza, President, Gramza Capital Management. Dan, good morning. Thank you so much for joining us this Friday morning.
It's great to be with you, Alex.
It's great to end this crazy week on markets with you, Dan. So I'm going to ask you your first take on inflation numbers, which I heard already in the commercial break, but our viewers didn't so far.
Well, you know, it is interesting, and obviously we're seeing an acceleration. As you mentioned, it's the 39-year high since 1982. We haven't seen this speed of inflation growth. So but again, the market seemed to be anticipating that because we're seeing how the market's reacting to it. And it could be reacting positive because of a couple of reasons. One, I don't think people want to go home short this market. So if we saw weakness today, if we saw weaker close by the end of the day, that would imply people are willing to go home on the short side of this market. And if you look at the overall trend, I don't know if you want to fade that kind of action. The second factor that could be at play here is the market anticipating what's going to happen with the Fed next week. So that'll be another thing we need to monitor. Is the Fed going to stay hawkish? But I think they're going to present that they're willing to do something. Whether or not they do something, I still think it's a variable there, because when they do something, the market reacts instantly. Our economy takes a long time to absorb that. So if it is supply issues, if it's those type of things, our cost of goods increasing that we're seeing, that's fueling this inflation, and our economy is not fully turned on, do you want to tamper with it very much at this point in the process? So I think that's what's at question. I think the Fed will present a potential hawkish view. I'm not so sure they're going to do anything, though.
Dan, I was wondering, we're witnessing this bull market for a very, very long time, probably a record long time. Which are the major risks for the bull market, in your opinion? From one side, inflationary pressures to the upside. From the other side, Omicron variant. Third variant could be also Fed tightening too fast monetary policy. So what are you most concerned about?
Wow, those are all good observations, Alex. And those are the three I think that could really cause volatility for this market. Probably at the top of the list that the market will react the fastest to, in a way, which we've seen, is new news about the virus. Another virus, or the virility of the virus that we have right now. Is it more than expected? It's been kind of decreased in terms of concern. It's spreading fast, but in terms of the lethal part of it, seems to be less. So, but that could change, the market on a dime. It wouldn't take much for that market to topple on that. Inflation is another one, too, the third one you mentioned. Right now, though, the market's becoming tolerant. And, Fed action, the Fed, in a way, advertises. They want the market, they want people's perceptions to fit the situation. And I think that's part of what we're seeing here now, is that aspect of it. And we'll hear more about it next week. But, the market teaches us how to behave. And what has the market done? As you have pointed out, we've had a historic move to the upside over multiple years. It teaches us how to react. It says to us, hey, if I get lower, buy me, and I'll reward you. If you look at a chart, that's really what we're seeing. We're seeing that rally, break, up, down kind of movement. And that's probably going to last for a while, because where else are people going to put their money? When we see risk off, when we see money coming out of the stock market, it usually heads towards treasuries, because people consider that a safe place. So that would be risk off for the stock market. And we've seen that, right? We saw it yesterday as the stock indices came off a bit. But what is it saying to us about Friday? And we're not fully engaged for our stock market today yet. It's pre-stock market open, but the futures are trading, and that's the footprint that we're looking at right now. And it's starting out strong in Asia. Asia, actually had a nice clean bottom and started moving higher. Europe, right now, your time zone is supporting our stock indices. So it's a great setup for a possible strong day today as this market unfolds.
You said something very important about Europe. We do see, by the way, very interesting change in trading here in Europe. The DAX, FTSE MIB, CAC and the FTSE 100 is so far above the flat line, all of them, but in a very moderate tone, if we can call it like that. I mean, they were trading down this morning and once again turning positive after US inflation data, which is pretty interesting, by the way, market reaction. I was wondering how to interpret the dollar index reaction, which has been extremely volatile since 14:30, which is 2:30 p.m. Central European time here in Europe. And of course, at the very moment when we saw the inflation data, we did see the dollar index up and down.
Well, again, those are great observations you've made. And if we start with just the idea of Europe, we've seen a mixture of data, from the UK to Italy to Germany. We've seen a mixture in terms of some things when it comes to industrial production. It's softened a bit like we saw in Italy. And then in other countries, we're seeing some of the economic numbers positive or in alignment with the market expectation. So what does that do in terms of our belief about the euro, for example, and then going back to the US? If inflation is increasing and the stock market's positive, well, if I'm in Europe, do I want to buy dollars? And if I buy dollars, that means I've got to change my currency to the US dollar. That puts demand on the US dollar. So that means we would look for strength in the US dollar. But you know what's interesting, Alex? We're not really seeing that. We saw a bit of a rally in the US dollar this morning and overnight, but we're not seeing it sustainable so far. And you would look for that. So right now, our current situation is a weaker US dollar, a stronger euro. We have a chance to get a rally going here. So I'd be very cautious about shorting the euro, shorting the Swissy. Those currencies really have some movement setting up for the upside. And I think that's what we're witnessing. Japanese yen's in the same boat. Aussie dollar, that's also a market that's set to move higher if the perception is that economies are turning back on, that maybe this virus situation isn't so bad. So for that market to get above that 72 cents, for example, wouldn't be surprising. In the euro, can we get above 13.50? I think we got a possibility of doing that. Maybe not today, but we'd look for it on Monday and Tuesday of next week. The British pound firmed up. The Canadian dollar is setting itself up. It's not as strong as the Aussie dollar, but we're seeing strength coming into that. 79 cents is what we'd look for as an objective for today's trading. And the dollar index. We made a rally. We started seeing stronger prices, but it's softer right now. It does imply a sideways to lower day for today's action. So here we are seeing evidence that people are willing to go home short the dollar, and they're willing to go home long the euro, for example. And I look for that to continue through Friday's trade action.
This is pretty interesting, Dan. I just wanted to have a very quick check on the energy market, which has been extremely volatile in the past few weeks for obvious reasons, and we're talking about Omicron and travel restrictions, but all prices are on track for biggest weekly gains since August this week in particular. So we do have the two benchmarks trading well above 1% gains. So I was wondering, what are your expectations for year end?
Oh, as we go into the end of the year, could we see a bit of a rally in crude oil? If The expectation is the economies are turning on, which means that we're going to see demand increasing for crude. We've seen in the United States production kind of returning after the Hurricane Ida. Remember, a lot of things were shut down when that storm came through, and it doesn't turn on overnight. It takes a while when you shut down a refinery to turn it back on, and we're seeing some of that evidence. So we're seeing some positive things in that regard. We have exported near record levels when it comes to shipping petroleum products around the world, so that's increased. I think crude oil is fairly priced right now. If we think about the price levels, I believe $70 is the fair level right now globally based on supply and demand. So if we looked at, I think a while ago, you and I talked about the idea, my perception is $65 to $75. I know a lot of people are looking for a huge rally as we go into the year, end of year. I don't see that. $75, that's a reasonable number again for this market. $70, about where we are right now, it's a big deal because that stimulates and for in the United States, it stimulates more production to come online. At that level, many companies, especially if they have heavy debt load, now can be profitable at that price. So we have produced wells that have been capped that are now getting turned back on, and our inventory of those is actually shrinking. So that means exploration. So over the next few months, you would expect more production in line in terms of being produced in the United States. So it's a number that works, I think. I know, if you look at the Middle East, they want to see higher prices.
Sure.
They'd like to see above, $80 or $90 a barrel.
They also want to be U.S. friends, though.
Yes, that's true. That's true. Good point. I just don't see the economics, the drivers of our market to push it a lot higher. So that $75 by end of year, yeah, possible. We could get above that fairly quickly, but I'm not looking for much beyond that.
Dan, I was wondering, final take on the gold. Do you think that it is still our best inflation hedge and, of course, safe haven? Because it really doesn't act as a safe haven.
Excellent observation, and I totally agree with you. We've had things happening over the last few days or few weeks that we've seen the volatility in the stock market. When the stock market's been going down and people are saying we got this new virus, oh my gosh, things could be terrible. The sky is falling. It's that kind of attitude because there's the unknown. Gold didn't do anything. So if gold is such a strong measure of inflation, in fact, right now, we have inflation. Now we're seeing gold up a bit today. The expectation for gold is that it's very positive. You look at the overall, I think, market attitude towards it. Now, if that's true, as we go into year end, we should be trading above 1800. We should be closing above 1800. I'm not so sure that's going to happen, but right now buyers are here. Let's see if they can follow through. Alex, if you look at that chart in front of you, you do not see a lot of green candles one right after another.
No.
Because we don't see consistency. You see a lot of lines on the top, those shadows on the top. That means they're selling into the rallies. They're not buying into it. So neutral for gold. The bias is for it to move higher, but I don't see the order flow here to support it. So it's going to be interesting to see if indeed we can get that follow through.
Thank you very much. Dan Gramza, President Gramza Capital Management. Thank you for joining us and have a great weekend.
Thank you, Alex. You too.